Thank you for tuning in to another edition of the Vulcan Report. The chart you have in front of you now is a chart of the E-mini S&P 500 futures. As you can tell, the market has been moving sideways for about, I'd say since the 5th of March. And we popped up. We tried to go a little bit higher here, which we did. We went from 1542 up to 1583. Couldn't hold it, even though we hit new contract highs since 2007. We have now pulled back somewhat. The thing to note is that since the market started trading since the beginning of the year, you see that we've gone pretty much straight up, even though it hasn't been in a straight line, but for the most part just continually going up without taking any breaths. And we're looking at about 100 points away down here at the 1425 area, 1425. That's where the gap was created, and that was created from the turn of the new year, from December 31st, and then the first trading day of the new year, January the 2nd. So between December 31st and January 2nd is where the gap was created that we have not even tried to go back and fill. Okay. The question is now, are we going to bounce off of trend line support, which is this black line right here? Okay, trend line support. And the top of the Kumo cloud, which is also a very strong support. Anyone who has followed these videos for any length of time knows that the top of the Kumo cloud in a bull market is your first support, and the bottom of the Kumo cloud in the bull market is your secondary support. And your line in the sand is the black line here. Normally, prices tend to bounce off of this line and then revert back upwards. Here you can see we barely touched the line right here, bounced right up. Here we got inside of the volatility bands and we cracked it here, went right back up again. So that's what I'm assuming that we're going to do today. We're going to bounce off of here and go straight up. And that should put us back, that should actually put us above the 1600 mark if we can get that high. So that's going to be the deal right now for the stock market. Finding another reason to continue to go higher. Aside from the part that Ben Bernanke is continuously printing QEs to infinity. So that's going to be the main issue at this point. All right, even though we're in a minor corrective phase here, the issue is going to be, are we going to continue this to break out higher and crack that 1600? The selling may and go away situation has been circling around. Are we going to see that? What's going to happen? Nobody knows. Tough to say right now. It's too early to know. All I know is that the market is still bullish. You see the little green bull at the bottom right hand side of the screen. See the trend indicator, bullish. As far as bullish momentum, we have bearish momentum, as you can see here. The question is, are we going to be oversold now and bounce back up, or are we going to actually close below the black line support here? Monday will be the first indicator to know what we're going to do, as Apple Computer's earnings are reported. I believe it's after the bell. All right, let's take a look now at crude oil. Okay, here's the chart for crude oil futures. Kind of looks like the gold chart a little bit. You see how we popped up above the Kumo cloud here back March 26th. Stayed above it for a couple of days, and then we just gave it all up. We got to this crucial bullish uptrend trend line support, and we cracked right below it big time. And now here we are in a bear market. You see the little red bear in the bottom right hand corner, bearish trend indicator, and here we are consolidating some of the oversoldness from the crash below the trend line support. Right now we're at 88.94 as the market is open for trading. Early Monday morning, where we just popped from 89.14. So what we're doing is we're consolidating and just correcting. We're probably going to get up or at least try to get up to around the 89.24. That's going to be intraday resistance, and then you're going to have more resistance once you get back up to the bottom of this old trend line support, which is now trend line resistance. And this is at the this value is around 91.82, and then of course right here, this purple line right here is at 92.71, and it's about where the bottom of the Kumo cloud is. As you can see, it's a very tiny cloud now. I expect this cloud to widen. Okay, the upper and lower bands of the cloud to widen, and I expect crude oil to continue to trend lower. We have major support at the 77 handle. 77 even is a major support for this crude oil. If we break that, then we're on target to get back into the $40 range on crude oil, all right, per barrel. If we do not, and that 77 holds, then chances are we're headed back way over 100 again. I expect this right here to start to correct sharply and just to rally, like catch all these shorts down here at this 83, 84 level and just boogie right back on up again. Alright, here's the chart for gold. I told you it looks just like crude oil. The only difference is, remember the crude oil was up here, trading above the Kumo cloud up in this area, and gold never made it. It got toward the bottom of the Kumo cloud here from a retracement, but that's about it. As you can see, we collapsed below the trend line support area now, which is resistance, and that's at 1538 and 40 cents. Okay, so you can see we have positive pulse scans right now, hence the blue bars. These blue candle is positive pulse scan, all right, and this red candles is negative pulse scans. Okay, and as far as the swing VIX is still negative. Okay, we're still in negative territory on the swing VIX, but it's trying to get stronger again. It's trying to gain some upward momentum. Now, as of Friday, we closed around the 1407 handle, but as at the time of this video, now we're at 1438.8 is where we just bounced off of. Now we pulled back to 1433.6. So it's trying to consolidate and retrace some of its incredible collapse. The upper part here of this down channel is going to be at the 1538.4 level. Okay, that's where it's probably going to try to get back to. And then the bottom of the Kumo cloud is ultimate resistance, and that's going to be at the I'll give it 1599. Okay, 1599.3. That's where the bottom of the cloud is. So because this range here is so narrow, we should explode right above the top of the cloud. Doesn't mean we'll stay there, but the top of the cloud is back at 1626. All right, if it can and close above 1626, then we're bullish again, and we have now done away with the bear market. Let's just take a look and look at the price destruction, see where we were. As you can see, we've been down for a long time. Okay, we've been down. We consolidated from the initial break here. Okay, this is the initial break here, and this is back in February 12th. Okay, and then you can see after we collapsed for several days, then we rally and retrace for several days. We did approximately a 50% retracement from the lows of this bar here to the top of this bar here, as you can see here, the top of this candle going across there. And then the market just collapsed again, but went sideways. The prior support held down in here. All right, tested, held, and then rallied again. But really, for the most part, we're just moving sideways. From the top of this candle here, all right, here's your resistance line going across, and then here's your support line going across. All right, not from here, but from here, this black line here. And then when you draw it across, let me get back over, you can see how it held for a while, okay, and then we collapsed right below it. So we consolidate, you can say, from February the 27th up until May the 2nd, okay. So when you consolidate for a month like that, going really nowhere, and then you collapse again, that catches a lot of happy bulls short, long. It caught them long here. They thought, oh, here's a bottom. Let me buy this. All right. Then the market starts pulling back, and then it just collapses here. Dips its head up for a little bit, and then this is what happened. A lot of bulls got caught up in this level here. In this month and a half consolidation, gave up the ghost. See your bear at the bottom here, bear trend. We have a negative swing VIX, we have a positive pulse scan because the bars are blue. So it's trying to do something. The last time we tried to do something was back on April the 5th. As you can see, we had a positive pulse scan, but it didn't really go anywhere. Okay, we couldn't do anything. It tried, but it failed. Okay, could not get going, and then we collapsed. So that's what happens. You try, and then you collapse. All right. Okay, looking at this silver chart, you can see that it's a lot like the oil and the gold, mostly like the gold. Same situation. We consolidated for a while, and we tried to do a retracement. Couldn't get the 50% retracement on this silver from its prior break, as you can see. Had a positive pulse scan, but we only went from 28.89 to 29.49. Not even a full buck bounce off these support lows here. And then we collapsed back down, took out the prior support. Not like gold. Gold support held, remember? We held from that final break all the way until we got that month-long consolidation, then we broke again. Silver didn't. Silver broke that 28.25 support and got down to 27.92. 28.25, 27.92. Didn't break it by much, but just enough to stop out these bulls who bought from these support lows. Just enough to stop them out. And then after stopping them out, what does it do? We went higher on negative pulse waves, two red candles together, then took out this high from this candle on a positive pulse wave, sucking in the bulls again because now they're afraid they're missing something. Then we go higher again, but we also take out 1, 2, 3, 4, a whole week's worth of support. This one held, but look at that. Okay. Anyone who bought anywhere in here would have been stopped out here. And then what does it do? It goes higher again. Now only by a fraction, but it still goes back higher. Makes the bull say, oh my goodness, I gotta get back in this thing. You use a wider stop. You use a support stop. Doesn't matter. After it suckers you in for the last time, it brings you lower. Much lower. You got hope. Oh, we just put in a new high here. My long is paying off. I can't believe I bought the bottom. And then what happens? Oh no, we're heading lower. My stop is in jeopardy. No, your stop is gone right here. Look at that. Bow. Took it out. See? Support broken. Black trend line support taken. A break of this reinstitutes the bear market downtrend. And that's exactly what happened. Then what happens? Oh, okay, well, we got positive momentum again. You got positive pulse scan, but then look what happens. We collapse again. This positive pole scan always sets up the next leg down in a bear market. That's what you're seeing here. This is not an opportunity to buy. This is an opportunity to get ready to sell. Okay. Positive pole scan. Bam. Positive pole scans in a bear market normally act as a way to set up for the next leg down. That's how that works. Just like in a bull market, a negative pole scan usually sets up the next leg up. Okay? Nothing always works, but for the most part, that's what you see. Okay? Unless the trend is going to totally be over with, then all bets are off at that point. And as you saw here with the silver, little teeny bullish phase above the Kumo cloud, but only to continue to work itself lower. So really a fake bull market, if you will. I mean, it was above the Kumo cloud and everything, but it just couldn't gather enough strength. We had the momentum. See, we had the momentum. All right, this is a positive momentum phase, but we really couldn't get anything out of it. We went from a positive momentum phase to immediately a bearish momentum phase. Bullish phase lasting a day, bearish phase. And within these phases, we have positive and negative pole scan readings. Totally confused market, doesn't know what it really wants to do. Hard and very difficult to trade a market that can't make up its mind what it wants to do. Very, very difficult to do that, folks. You really don't know what else you can do in a situation like that, except for get short. And that's all you can do. But even then, it's difficult to get short because then you get a positive pulse scan that breaks out to a new high and then collapses again. Very, very, very difficult to trade in this type of a market environment. You're going to get in a washing machine rent cycle, tossed to and fro. What can I say? That's just how that works with the silver. Very difficult markets to trade as of late because of all the market manipulation by way of QE and pumping money into the system and just all types of banker shenanigans. Just stay alert. Like I told you, eventually the metal markets are subject to shorting. All right, and when there are more sellers in the market than buyers, prices collapse. So try not to get married to any one direction. Just always be prepared to go long and short when you're trading these markets, because a trend can last a day, it can last a week, a month, whatever. We don't know. You just buy and sell as you see fit. But in my opinion, finishing up this video, this silver market is setting up now for the next leg down. You have positive pulse scans in the bear market. Only thing I can say is you're waiting for another shorting opportunity, just like this. I think this here is repeating itself again here. Where could we end up going? Probably back up here toward this 25. I'll give it 26, if it can even get there, and then you're gonna collapse again. So be vigilant and be quick. Remember, take what you can and give nothing back.